Ever wish you could, peek into Warren Buffett's portfolio? See what he's betting on?
Yeah.
Well, today, we're getting pretty darn close.
Okay.
You sent us this Motley Fool article. 3 no-brainer Warren Buffett stocks to buy right now. And I have to admit, even I was surprised by some of these picks.
It's always fascinating to see what a seasoned investor like Buffett, what piques his interest, I guess.
Right.
Especially when it comes to companies that at first glance seem like obvious choices.
Exactly. I mean, we're talking Amazon, Chevron, and Visa.
Right.
Household names, industry giants.
Yeah.
What's Buffett seeing that maybe the rest of us are missing?
That's the million-dollar question, isn't it?
It is.
And that's what we're here to unpack today.
Yeah?
Let's start with Amazon, ticker symbol AMZN.
Okay.
The article mentions Berkshire Hathaway owns about 10 million shares, roughly a $2 billion stake.
Wow.
Not their biggest holding,
Right.
but definitely not chump change either.
Right. And it's easy to think Amazon, well, duh, they're massive. But the article digs a little deeper, pointing out that it's about so much more than just online shopping these days.
Absolutely.
Yeah.
One area that often gets overlooked is their dominance in cloud computing with Amazon Web Services, or AWS.
Oh, yeah.
It's become a huge revenue generator for them, and a lot of analysts believe it's still got significant growth potential.
Yeah, and then there's all those other brands they've acquired over the years.
Right.
Goodreads, Fire Devices, Zappos, Ring, Whole Foods, Audible. It's like an empire of its own.
Yeah, it is.
But with all those moving parts and being such a behemoth of a company already, can they really keep growing at a pace that excites investors?
That's what makes their Q3 results so intriguing.
Okay.
Revenue was up 11% year over year. International revenue climbed 12%. And get this, operating income soared by 55%.
55%?
Yeah.
Seriously?
Yeah.
That's a pretty remarkable jump for a company of Amazon's size.
It is.
What's fueling that kind of growth? And more importantly, can they sustain it?
Well, the article points to a few key factors. One is their constant push into new markets and services. They're not content to just rest on their e-commerce laurels, right? They're heavily investing in artificial intelligence, or AI.
Oh, wow.
And that's an area where they're uniquely positioned to leverage their vast amounts of data.
Okay, so maybe this is where Buffett's long-term vision comes into play.
Right.
He's not just seeing the Amazon of today,
Right.
but the Amazon of 5, 10, even 20 years down the line.
Exactly. Think about the potential of AI to personalize the shopping experience.
Yeah.
Optimize logistics, even develop entirely new products and services. That's a future that Amazon is actively shaping, but it's not just about future potential.
Right.
The article also mentions that Amazon's current valuation might be surprisingly attractive.
They said their forward PE ratio is currently sitting at 36, which is significantly lower than their 5-year average of 52.
Yeah.
For someone who's not a Wall Street whiz, break that down for me.
Sure.
What does that actually tell us?
A PE ratio, or price-to-earnings ratio, essentially measures how much investors are willing to pay for each dollar of a company's earnings.
Okay.
A lower PE ratio can indicate that a stock is undervalued compared to its earnings potential.
So does that mean that investors are underestimating Amazon's future growth? Or are there other factors at play here?
That's a very good question. It's possible that short-term concerns,
Okay.
like inflation or supply chain disruptions, are creating some hesitation in the market.
Mm-hmm.
But it's also possible that people are overlooking the sheer breadth of Amazon's business.
Yeah.
It's not just about selling stuff online anymore.
Right.
They're a cloud computing powerhouse, a logistics giant, a media company, and they're rapidly expanding their footprint in areas like healthcare and grocery delivery.
So maybe this is what Buffett sees.
Mm-hmm.
The potential for Amazon to become even more deeply embedded in our lives in ways we can't even fully imagine yet.
Right.
It's almost like a picks and shovels play on the future of, well, everything.
That's a brilliant analogy. Instead of trying to pick the winning product or service, you're investing in the underlying infrastructure that powers it all.
Okay, so we've got this fascinating picture of Amazon,
Yeah.
a company that's both a familiar giant and a constantly evolving innovator.
Right.
Let's switch gears now and talk about Chevron, ticker symbol CVX.
Okay.
This one, I'll admit, caught me off guard.
Chevron represents a significant chunk of Berkshire Hathaway's portfolio.
Okay.
We're talking their fifth biggest holding at nearly $17.5 billion.
Wow.
Clearly, Buffett sees something worthwhile in this oil giant, even in a world that's increasingly focused on renewable energy.
Yeah, you mentioned earlier that I'm interested in dividend income, and Chevron definitely seems to fit that bill.
Right.
The article highlighted their long history of dividend increases, not to mention that juicy 4% yield.
It's true. Chevron has a solid track record of returning value to shareholders.
Yeah.
They paid out $7.7 billion in the third quarter alone through a combination of dividends and stock buybacks.
That's a lot of cash flowing back to investors. But I have to ask, the energy sector can be pretty volatile. What makes Chevron stand out in such an unpredictable industry?
Well, for one thing, their size and scale.
Okay.
With a market value close to $290 billion, they're a dominant force in the industry.
Wow.
They also have a diversified portfolio of assets, from oil and gas exploration and production to refining and marketing.
So even if one part of the energy market is struggling, they've got other areas to cushion the blow.
Exactly.
Okay.
And while their third quarter results weren't spectacular, they did exceed analysts' expectations with smaller losses than anticipated.
Interesting.
Plus, they're planning to cut spending by $2 billion, which could potentially boost profits and lead to even higher shareholder returns down the line.
Interesting. So maybe it's not just about the dividends, but also about their ability to navigate the ups and downs of the energy market and deliver consistent performance over the long haul.
Precisely. And when you consider their current valuation with a forward PE ratio of around 13, slightly below their 5-year average, it does raise the question, is Chevron a hidden gem in plain sight?
A stable, dividend-paying giant in an industry that's, let's face it, not going away anytime soon.
Right.
I'm starting to see the appeal.
It's certainly worth considering, especially if you're looking for a way to balance out the high growth potential of a company like Amazon with something a bit more grounded and income-oriented.
Okay, so we've got Amazon, the innovator, and Chevron, the steady provider.
Right.
That brings us to our final pick, and this one is definitely a name everyone knows.
Okay.
Visa, ticker symbol V.
Visa is a fascinating case study in market dominance.
Yeah.
They operate in over 200 countries and territories, with roughly 4.5 billion cards in circulation worldwide.
Wow.
The sheer volume of transactions they process is mind-boggling.
Yeah, the article mentions something like 300 billion transactions per year,
Right.
worth over $15 trillion. That's more than the entire GDP of some countries. It makes you wonder, with that kind of reach, is there even room left to grow? Well, their Q4 results tell a different story.
Right.
Revenue jumped 12%, and net income increased by 14%. Not quite Amazon's numbers,
Right.
but still very healthy growth for a company of that size.
Yeah.
What's driving that continued success?
A large part of it comes down to their vast network.
Okay.
Visa has built an incredibly powerful infrastructure that connects merchants, banks, and consumers all over the world.
Yeah.
That kind of reach is extremely difficult to replicate.
Mm-hmm.
It's like the network effect we see with social media platforms.
Yeah.
The more people use it, the more valuable it becomes for everyone involved.
So it's not just about the sheer number of cards in circulation,
Right.
but the entire ecosystem they've created that makes sense.
Yeah.
But the article also mentioned something about Visa being low capital intensive.
Right.
I'm not entirely sure what that means in this context.
That's a great point, and it's a key aspect of Visa's business model.
Okay.
Low capital intensive means they don't need to constantly invest huge sums of money in physical infrastructure or equipment to maintain their growth.
Okay.
They're not building factories or laying down pipelines.
Right.
Their primary asset is their network, and that's largely digital.
But that means more of their earnings can be returned to shareholders through dividends and buybacks. Right.
Precisely.
Okay.
And that's something that a long-term investor like Buffett would find very appealing.
Mm-hmm.
Remember, he's all about compounding returns over time.
And that dividend growth is nothing to sneeze at either.
Yeah.
The article mentioned their dividend per share is currently $2.15, which is up significantly from $1.58 in 2022 and $1.05 in 2019.
It's a pretty impressive trajectory.
Yeah.
And while their current dividend yield of 0.74% might not seem huge at first glance,
Right.
that rapid growth rate makes it much more attractive for investors who are in it for the long haul.
Okay, so we've got these three very different companies, Amazon, the innovator Chevron,
Yeah.
the steady income generator,
Sure.
and Visa, the global financial network. What's the common thread here? What's Buffett seeing that connects these seemingly disparate picks?
I think the underlying theme here is quality.
Okay.
These are all companies that are leaders in their respective industries.
Right.
They have strong track records of success, proving business models,
Mm-hmm.
and they're well positioned for continued growth in the years to come.
So even though they operate in different sectors, they all share certain fundamental characteristics that align with Buffett's investment philosophy.
Exactly. He's not chasing fads or trying to time the market.
Yeah.
He's looking for companies with durable competitive advantages, or what he calls moats,
Okay.
that can withstand the inevitable challenges and emerge stronger on the other side.
So like built to last, basically.
Yeah, think about it. Amazon's moat is their vast ecosystem and their relentless focus on innovation.
Mm-hmm.
Chevron's moat is their scale, their diversified assets, and their essential role in the energy market.
Right.
And Visa's moat is their unparalleled global network and their low capital intensity.
It's like they're each dominant players in their own game.
Right.
And they're constantly raising the bar for any potential competitors.
That's a great way to put it, and I think there's another important lesson here for investors.
Okay.
Sometimes the best opportunities aren't the flashy new startups or the hot tech trends.
Mm-hmm.
Sometimes the most solid investments are the companies we interact with every day.
Right.
The ones that have been around for decades and have proven their resilience time and time again.
It's almost like a reminder to not overthink things.
Yeah.
Sometimes the no-brainer choices,
Right.
the ones that seem almost too obvious, are the ones that deserve a closer look.
Exactly, and that's what makes this deep dive so interesting. It's not just about understanding these specific companies,
Right.
but about applying the principles behind Buffett's selections to our own investment decisions.
So for our listener who's maybe feeling a little overwhelmed by all the noise and volatility in the market, what's the key takeaway here? What can they learn from Buffett's approach?
I think the biggest lesson is to focus on the long game.
Okay.
Don't get caught up in the day-to-day fluctuations or the latest headlines.
Mm-hmm.
Do your research. Find quality companies with solid fundamentals.
Yeah.
And invest for the long term.
Mm.
Remember, Buffett's favorite holding period is forever.
Wow.
He's not looking for quick flips.
Right.
He's building a portfolio that can weather any storm and continue to generate returns for decades to come.
That's a powerful reminder, especially in today's fast-paced, information-saturated world.
It is.
But it also brings up another question.
Okay.
Let's say our listener is intrigued by one or all of these companies.
Right.
What's the next step? Should they just run out and buy shares based on this one article?
Absolutely not. Remember, this is just a starting point.
Right.
It sparked our curiosity, but it's crucial to do your own due diligence before making any investment decisions.
Right. Don't just blindly follow someone else's picks, even if it is Warren Buffett.
Exactly. Every investor has different goals, different risk tolerances, and different time horizons.
Mm-hmm.
What works for Buffett might not work for everyone.
So how does our listener go beyond the headlines and really dig into these companies to see if they're a good fit for their own portfolio?
Well, there are a ton of resources available.
Okay.
Start with the company's website.
Okay.
Look at their annual reports, investor presentations, and recent earnings calls.
Mm-hmm.
These documents provide a detailed overview of the company's financials, their strategies, and their future outlook.
You can also find a wealth of information on financial websites like Yahoo Finance or Google Finance.
Right.
You can see historical stock performance, analyst ratings, and news articles related to the company.
And don't underestimate the power of independent research firms like Morningstar or Value Line.
Okay.
They offer in-depth analysis and ratings on a wide range of stocks.
It sounds like it's all about taking that initial spark of interest, that initial curiosity, and then really digging deeper, exploring different perspectives, and forming your own conclusions.
That's the key. Remember, investing is a journey, not a destination. It's about continually learning, adapting, and growing your knowledge. And sometimes the most valuable insights come from asking the right questions, even if they seem obvious or basic.
You know, it's funny. We started this deep dive talking about peeking into Warren Buffett's portfolio.
Yeah.
But it's turned into something much bigger.
It has.
It's about learning from one of the greatest investors of all time,
right.
but also about applying those lessons to our own unique circumstances and building a portfolio that reflects our own goals and values.
That's what makes this so much more than just a stock picking exercise.
Right.
It's about developing a deeper understanding of the market, of businesses, and of ourselves as investors.
It's like we've been given this rare glimpse into Buffett's thought process.
Right.
And now it's up to us to take that knowledge and apply it to our own investment journeys.
Precisely, it's about empowering ourselves to make informed decisions, to be thoughtful stewards of our own financial futures.
So for our listener who's been on this journey with us, absorbing all this information about Amazon, Chevron, and Visa,
Right.
what's the one key insight you want them to walk away with?
I hope they realize that investing isn't just about picking stocks.
Okay.
It's about understanding businesses, recognizing their potential, and aligning those insights with your own personal financial goals.
It's about looking beyond the headlines,
Yeah.
beyond the hype, and really getting to the heart of what makes a company tick.
And sometimes the most no-brainer choices.
Right.
The companies that seem like obvious winners are the ones that offer the most fertile ground for exploration and discovery.
So for our listener out there, keep exploring, keep learning, and never be afraid to challenge conventional wisdom.
Yeah.
Happy investing.